afternoon and happy Tuesday, everyone. Welcome to Stock Market Today. It's Alyssa Corum and Ed Carson here to break down today's action in the trading session. And we're also going to take a look underneath the surface. There was some good action and some not so good action today, Ed.
That's right. Definitely some sectors did better than others. We're going to take a look at Oppenheimer, strong performer today. Entegris also looking good, but Freeport-McMoRan, big copper miner, not a good day.
We'll get into that. But first, to look at the major indexes, here is SPY, the S&P 500 ETF. The S&P down 0.2% for the day, but the NASDAQ being the hardest hit, down 0.7%. The Dow down about 0.25%. The Russell 2000 down about 0.4%. So just edging lower today, essentially for the S&P ahead of a key Fed meeting, Ed.
Yeah, I mean, it's not surprising that the markets are just sort of pausing ahead of a Fed announcement. It's possible the Fed will start talking about reducing bond purchases, so-called taper talk. A lot of people think that's not going to happen for another month or two or three, but it could happen. I mean, so there is that relevance. So it's not a surprise. And you look at the chart, look at all these charts. They're really, I mean, look, the S&P, I think, hit a record high briefly intraday. I don't know if the SPY did, the ETF. Sometimes the ETF strike slightly missed, but in any case, it's at record highs. I mean, that's what matters. And it's pulled back modestly. Yeah, the NASDAQ was down a little bit more, but they're all trending higher with the possible exception of the Dow. And, that has certain components in it that aren't doing as well. But even then, it's not that far from a record high, not really. So, you can't get too worked up about a modest decline. We're in a nice uptrend here. So, tomorrow will be more interesting, but right now, I think everything's looking pretty good.
Yeah, and quick check-in on small caps as well, holding within its range of the last couple of days after a strong move getting back above that 50-day moving average. But Oppenheimer, definitely a bright spot today. Ticker OPY, a financial name, breaking out, up 8%, and it looks like a pretty strong close here, Ed, and volume behind this strong move. What a move Oppenheimer has had since November.
Yeah, really powerful move, and the volume really came in. And there have been some nice volume the previous days as it came up. Okay, a lot of financials have been hit by treasury yields, and while they're trying to sort of bounce off of lows, I don't think this one really has that much of an impact with interest rates. This is an investment bank. They're getting M&A stuff, trading. It's not interest rate related per se. Blasting higher, I mean, whether or not you want to use sort of that early entry doesn't matter. It went right through it. By the time you saw that early entry, probably would have come through it. A lot of things. The relative strength line hitting a new high, revenue growth accelerating, 3/4 of triple-digit earnings growth. So really a lot to like about this. I mean, it's not the most liquid tremendously. That would be the only thing. But other than that, looks really, really impressive.
A strong breakout today. Just a quick look at the intraday chart, and you can see it really picking up steam throughout the day. So now let's take a look at Entegris, ENTG, a chip equipment stock. We've seen a number of chip equipment names popping up on our radar: Applied Materials, ASML, Lam Research, and now Entegris. Ed, what do you think about the action that we've seen here over the last couple of days?
Well, it's nice that it's sort of bouncing sort of off that 50-day, 10-week line. Because you could have argued it was sort of lagging. It's lagging ASML, which is at record highs. And Applied Materials and Lam Research are sort of setting up handles. And so, there's other ones out there. So I don't want to say, but maybe Integris is moving up, and you never know which. And this one's had strong runs. I mean, it had a nice run from in last fall where it came up nicely, that RS line. This is now a long-term leader. There's a few chip names on the long-term leaders because the stability is coming up on that. I will say one negative is that the earnings growth has slowed a little bit, but it's not like there was the comparisons are getting more difficult, and it didn't have a bad 2020. On the upside, the revenue growth has accelerated for 4 straight quarters. So this is definitely one to be considering. It's also just a sign that the whole group has strength. It's always nice to see that.
And we do like buying long-term leaders, especially when they are close to their 10-week line. So we have ENTG less than 5% above that level instead of waiting for a breakout to new highs, because long-term leaders are our strategy for that. It's kind of like William O'Neill meets Warren Buffett,
Yeah.
where you're holding them for ideally longer periods because they had that long-term outperformance. You may be sitting through times once you're up on a position through bases or even slight downturns. So we like buying them on the pullbacks if they're more stair steppers than buying on the breakouts for these.
And that's a really good point. If you could go to the weekly just for another moment, if you look at some of the breakouts, they would come back and then sort of come back down. Like, yeah, that one's a perfect example where if you bought on the breakout, like actual the official buy point on something or the one prior than that, so it breaks out in this powerful move. And when by the time it finally gets above the official buy point, well, it would have rolled over, and that would have been tough to deal with, especially going below the 10-week line, if only briefly. So buying off the 10-week line, you avoid some of those, oh boy, am I going to lose money on this stock? Now, that's not a perfect, there's no a cure-all, but that's one reason, because the growth isn't amazing often with these numbers. They're solid, strong growth, but it's not rip-roaring 300% quarter after quarter with the long-term leaders generally.
Yeah. So especially for long-term leaders, but other types of stocks as well, non-long-term leaders,
Yes, you're right.
buying on these pullbacks, or at least when they're within 10% or ideally even less to their 10-week lines, is not a bad strategy. And speaking of the 10-week line, we may be able to talk about this with Freeport-McMoRan, ticker FCX. It closed off its lows for the day, but still gapping down almost 5% in above average volume. So pretty decisive sell signal here, Ed, for a stock that has just seen an incredible move off of the pandemic lows. This really would be, if it closes here for the week, its first time closing well below this 10-week line this entire run up.
Yeah, I mean, it's still possible it could bounce back. I mean, you could see that there have been a couple of times where during the week it's come sharply below the 10-week line and then bounced back to essentially either above or right to it. So it's possible, but in like copper prices fell really sharply today. I saw one report saying it was the worst in 6 months. I don't know, but it was down 4%. You know, if you're a copper miner, there's really not, you can't avoid that. I mean, if copper prices are in a downtrend, copper stocks are going to fall. And, you know, could that turn around? I mean, copper's had a lot, you know, it could easily bounce back, but it's just something that you have to be aware of. And this is an issue with commodity plays. And I mean, on the plus side, it's trying to find support at the top of its old base. So look, you know, if I were holding this, I probably would have tried to sell at least part of it today. You know, you could maybe wait like to see if it bounces back up. I think if it falls any further from here, you'd have to say it's not coming back, or you just have to cut your loss. But I would at least have taken profits partially, see if it can bounce back. But that's really, we're talking about, you're hoping for copper to come back, and maybe it will. But yeah, just maybe it just is going to take a break for a while.
Yeah, but as you said, we talk about scaling out. Selling doesn't have to be an all or nothing proposition, but this kind of action definitely forces your hand, whether you're selling in thirds or quarters. Maybe you have a third or a quarter left at this point, and see where it finishes out the week. Another thing that I think is interesting is, even though it's had a decent move this year, the volume to the downside for 2021 is really what stands out to me on this weekly chart. And we'd rather see those be blue bars than red bars.
You know, that's a really good point. I guess one of the things, if you bought off the last breakout, you probably should have gotten out, because it's now a round trip. It had a decent gain here. So we were talking about more people who had longer term gains. I just want to make that clear, is probably should have scaled out a little bit earlier. But yeah,
taking some profits into strength, you know, maybe looking at either this gap down to the 21 day, if you know, you were looking for another signal, and even yesterday with it closing right around or just below the 50-day, that could have been another area to trim some. So Sell rules. The selling is difficult, but again, it's not an all or nothing proposition, and scaling out can help you lock in some of those hard-earned gains.
That's right.
All right. Well, that is it for today, everyone. Thanks for tuning in. Ed, I think you have a webinar to get to, don't you?
Yeah, I got to work on my pre-market routine, I guess. So we're going to be talking about Chris Gessel, David Chung, and I. We're going to talk about sort of the routine that we go through after the close and before the opening bell to prepare, not just for IBD Live, but for our own investments. And I think it's really useful just for investors to be thinking about how they can prepare overnight.
Mm-hmm. Incredibly useful. We get so many people on IBD Live asking, wanting the scoop. And now we have a webinar where you will address exactly that. So can't wait. Go to investors.com/webinar to sign up, or just the homepage of investors.com. I'm sure you'll see some different messaging there to get you on the right track for that webinar. And if you can't make it, we do archive all of our monthly webinars, and you can check them out in the video section. So thanks, Ed. Good luck with the webinar, and we will see everyone back on IBD Live tomorrow for another fun day. Investors.com/IBD Live. Thanks for tuning in.